shit rolling. Coming in blue like the ocean. I already knew I was chosen. I just be grinding, stay focused. And this shit don't know reloaded. I had to stop talking.
Alright, so last video we established the importance of market structure, and in this video we're breaking down counter trends, pullbacks, essentially the retracement part of the market structure. So we're just gonna rehash again what market structure is and why it's important. Okay, so over here we notice that we have a high and we then have a low. This right here is what we call a range. So we see a retracement over here, and what we look to do is we look to see a break of structure. Okay, once there's a break of structure over here, this then becomes the new high, and then over here we see that this would be a new low. Okay, and then we once again have a retracement into the into premium once more, and over here we then have a new high once we get this break. So once we break this, we notice that this becomes our new high, and then this becomes our new low, and then we have a retracement, which basically just makes a downtrend, right? So when it comes to counter trends, what we need to notice is we must notice a PD array on a higher time frame that gets tapped into. In this case, for example sakes, we see that we have a daily swing that got hit. Okay, and after this daily swing got hit, we then notice that it caused a retracement back up. Okay, so we also need to understand that when it comes to counter trends, we always want to remember that we are not targeting the highs per se. What instead we're targeting is we're targeting PD arrays near this 50% zone right there. So this is where we should be targeting. Okay, so over here we're basically zooming into this price action. So once again we have our daily swing that was obviously tapped over here. Now what we're looking for would be a break of structure in the 1 hour. Okay, and over here that's what we see. We see a 1 hour break over here, right? So this is our low, and then from here we break structure, and then from here we have a 1 hour. We have a 1 hour high, or we have a high. Okay, and then what we look for is a retracement, and then we look, since this is our new low that would have been formed, we look for yet another break of structure, and then we wait for a retracement in here. But we're not looking for any type of retracement, right? It goes without saying that of course we have to get within a discounted we have to get within a discounted zone within this range over here. But that's not all. We have to see liquidity get grabbed, either in the form of a swing or in the form of a fair value gap. But it's important that in counter trend trades that we get into a discount, first of all. Second of all, we have to grab liquidity. That's important, and it goes without saying. If you don't have that, you can easily lose, right? And we're going to get into it. So we are on a daily time frame. And what I look to do on the daily is I look to see the overarching market structure, what's happening, right? So over here, we notice that price has a downtrend. Why do I say that? We have a high, we break structure, we form a low, and this becomes our range, okay? And then we have a retracement. Simple, right? From this new high over here, we break structure, and then we form a low, and then we have a retracement. Okay, so it's basically what I was saying before. From the high to the low, we have a retracement. Okay, from the high to the low, we have a retracement. Okay, and that's how it goes. Simple. Now, the price action that we're focusing on is over here. And the reason why we then focus on it is because we just hit a daily swing. You notice that? We hit a high time frame PD array. And not only that, we notice that my setup has formed. And what is my setup? Let's get into it. Basically, what I look to see for my setup is I see the first candle get printed. The second candle gets printed, and I expect it to close inside the first candle's range. In this scenario, it did not necessarily close within this first candle's range. However, I could tell that it does want to retrace back up because, first of all, we have hit liquidity, and it's what makes sense. And what we look to do is we look to use the third candle or the fourth candle to target the first candle's highs, okay? Knowing that we're going to retrace, this was my idea getting into it, okay? So with all of that being said, let's get into the meat and potatoes of what we're supposed to see when we get into a counter trend, okay? So we have established already that liquidity had already been taken. Now, what are we looking for? Like I said, we look for a break of structure. Without a break of structure, we don't enter, okay? Without a break of structure, we don't enter. And what's the next thing that we look for? We look for a retracement, okay? And then one would say, so I guess we should enter here. What would have to calculate over here is whether this is in a discounted range, is in a discounted zone or not, okay? And over here, we notice that price actually ended up getting into a discount when it retraced over here. So if you were to enter over here, what you would have to do is enter on the 50% zone and have your stop loss over here, right? But why do I say this is not safe? This is not safe because we noticed that price never retraced into liquidity. Instead, it left this 1 hour liquidity over here and this order block over here. If you notice this blue line over here, it shows an order block. We noticed that price did not get into it. All it did was retrace into this 50% zone, and we did not grab any liquidity in a discount. It's very, very important to grab liquidity in a discount. That's why you have to be aware. And what do you need to be aware of? You need to be aware of any potential PD arrays. In this case, we had a 4-hour PD array, which after price had retraced, it then ended up going up here. And guess what? It ends up retracing. It retraces to do what? It retraces to potentially, obviously, get into a discount. First things first, it gets into a discount and takes liquidity. And if we check here on the 4-hour, okay, let's just confirm here on the 4-hour, we happen to have a 4-hour fair value gap, right? Over here, we have a 4-hour fair value gap. So this was acting as liquidity. So we have a 4-hour swing over here that can potentially push price back down. And we have 4-hour liquidity, which is calling us back down, okay? So these are the things that you have to pay attention to. Remember, I said in counter trends, we always have to see a liquidity grab before the actual move up, right? So in this case, price had retraced and had gotten into a discount, but it wasn't enough because liquidity was not grabbed within the discount. Instead, it hit this 4-hour PD array, which caused it to move down. And over here, we then noticed that price was taken, and then that's when price started going up. Let's go down into a 15-minute just to see what ended up happening within a lower time frame. So over here, after price had taken liquidity, we see that the break of structure was a lot stronger, okay? But I won't lie. At the time, I did not have this understanding and I did not have this confidence, because when I had seen price all of a sudden starting to go down and this 1 hour fair value gap that it had formed, I was thinking to myself, wait, what if it wants to go down, right? What if it wants to go down? So I ended up leaving this trade and I never actually made money out of it because of fear. But instead, what I should have known at the time was this setup is still safe. Why? Because we have grabbed liquidity. That is the only way you can know that you're safe, when we have grabbed liquidity. However, if we have not grabbed liquidity, then the market can do whatever it wants to do. It can continuously keep going down, okay? But the fact that we grab liquidity and then we see this energy over here breaking structure, and guess what it did? If we look at this once more, it literally retraced back into this fair value gap on the 15-minute, and then it continued going up. So one could have actually entered over here, right? And had your stop loss over here, and have gotten a 1 to 2. But I just want to be fully transparent. I did not enter this trade. Matter of fact, I entered this trade, okay? I entered this trade, but I ended up leaving when I saw price retracing, because I started doubting myself. And you can understand why I was doubting myself in the moment, because I was not confident in counter trends at that time. But after this breakdown that I've shown you, hopefully most of you will be confident. I had seen this 1 hour, and I had seen this retracement going down, and I was like, wait a minute. What if it actually wants to continue back down? So I left the setup, okay? But next time I won't be doing that. And yeah, that was basically the breakdown for counter trends. Hopefully you have gotten some value from this. Like and subscribe. See you next time on the grind.